Hey gang, Akil Stokes here, head currency trader and trading coach at Trade Empowered, and welcome to my weekend review video. I know I have a lot of new members joining me today. I want to say thank you. I appreciate you spending some time with me. If you like what you see, just do me a favor, hit that like button, hit that subscribe button, and hit that share button as well so others can view this video too. Now, I got a lot on topic today. We're going to dig into the charts as I mentioned earlier, but first I want to give you guys a recap of how my week's been going. I am in another week of drawdown. I know I seem excited. I just love trading, but I am in another week of drawdown. And well, as you guys know, it is stressful. It is painful. It is frustrating. I get a lot of comments every time I tell you guys the reality of my trading. I guess there's a lot of people out there that just want to show you all the winners and how much they're returning. I like showing you guys the downside because, well, that's how you learn from it. And it kind of brings a comfort level for newer traders to see that, hey, this guy's a professional, this guy's a teacher, and he's going through the same thing as I am. So I am in a drawdown for my second week. However, there is a shining light at the end of this tunnel. I'm in a few trades right now that may actually pull me out of that drawdown. I'm heavy on the pound right now. I've got a pound dollar trade in that is up about, probably break even by now. Pound dollar trade that's back to +5. We were up about 30 pips at one point, down to +5 now. I'm in a pound Swiss trade from the other day. Syndicate members, you remember this one, up about 27. We'll see how this goes by the end of the day. And I still got my pound Aussie trade on, which is +1. So I was up earlier in the day, but now looking at about break even on most of these pairs. So we'll see how the day goes. I can either dig myself in a deeper hole or I can, get myself out of it a little bit. But either way, that's trading. We plan to trade. We take the trades that are in our plan, and we just trust that the work we did in our back testing, the work we did in strategy development, pay off. But it's going to happen. You can't avoid drawdowns. Talked to a trader today in the live room who said he has an issue moving stops and stuff like that because he wants to catch all the winners. And I told him that's not going to happen. No matter how good you are, you're always going to catch losers. You have to learn how to deal with those losers mentally and also minimize those losses. So now, with that being said, it wasn't all a bad day, a bad week. I did have some very good trades on board. I'm actually going to show you a flashback right now of something I recorded after, I think it was Tuesday's live room session, where we had two very good structure-based trades. And they kind of worked on going from higher time frame, make our higher time frame prediction and using a lower time frame to enter in anticipation of the higher time frame move. And well, you'll see that. Afterwards, I'm going to come back and answer a question from one of our syndicate members on, he asked me earlier today, Akil, how do I go about taking extended targets or trailing second targets? In what situations or what scenario do you do that in? And I'm going to go ahead and show you guys an example of that. So sit back, enjoy this little flashback video of what I recorded on Tuesday. Two very good trades there, and I'll see you guys in a little bit. Hey guys, Akil Stokes here. We just wrapped up Wednesday's live trading room session, and actually I originally planned on recording it. We had some very good analysis on both, mainly the euro yen, but a few other pairs as well, and it was breaking down structure from the higher time frame. But silly me, I accidentally pressed the hotkey button and paused the recording in the middle and essentially did not record anything. I deleted all that I wanted to share with you. But I want to do an old-fashioned recap of how the day went, and it was a fairly slow day. Now, we had a few patterns on the higher time frame that had passed their original entry marks. So we did a nice little breakdown on the benefits of, for those traders who happen to miss that trade and enter late, and how the risk reward is in their favor now. But the two trades we had on the day during the live room session were both structure-based trades. And again, they really come off the higher time frame analysis. One was on the euro yen, and I'm going to try and make this as brief as possible. We spent probably about 40 minutes in the live room going over it. But euro yen here, essentially on the higher time frame, we're in between two structure levels. Let me actually delete these fibs. You can see we have major structure down here. We just hit the beginning of that DSR zone. Look left, structure leaves clues. And then as we zoom in, you can see that we just put in a lower low, lower close, meaning that the market's been ebbing and flowing down. We have a new structure low right here, our outside return, and we just put in a lower low, lower close. So we're getting two different signals here. The lower low, lower close is going to tell us trend continuation to the downside. Obviously, the major structure level on the higher time frame is going to tell us look for a counter trend trading situation. So what we looked for in this room after I took our live room members through a game called Tell Me Where Your Stops Would Go and Tell Me Where Your Entries Would Go, or your targets would go. That's always fun. Again, if you can learn something new by someone else's opinion, it works. We're on the right path, but essentially we're between two different levels. We went down to the hourly chart and we were looking for a double bottom at the time at this lower structure zone. This is the overall move. Again, I'm high on this trend on this counter trend move because again, we're at major structure looking for the market to retest it. We were oversold on the lower time frame and looking for another bounce back down there and a retracement back up to, well, previous structure looking left. In these times of someone called it the new normal today. In these times of low volatility, I've significantly decreased what I'm looking for in target. So no longer am I looking for at least target one, at a full retracement. I'm looking to get a little bit out the market. I'm looking to move my stops to break even. And then I'm looking to, if I want to get aggressive, looking to shoot for those extended targets with house money, meaning, when I have no possibility of losing. So we were looking at our structure level down here. We were looking at our structure level up here. And again, originally we were waiting for the double bottom. Now, what we did was we also said this, because we're anticipating a double bottom, if the market comes up to previous structure, there's a short opportunity. So a chance for us to get short in the market and trade this down towards the potential double bottom. And that's just what we did. We went down to a 15-minute chart. And I think we actually did this on the hourly, but it's going to be more easily seen on the 15-minute. And we saw an advanced pattern. We saw a Gartley pattern looking like this. X to A to B, B to C, and C to D. And what we did was we used this Gartley pattern to enter our trend continuation trade. Again, you can see the ebbs and flows of the market. New structure low, outside return, new structure low. Little consolidation here and so forth. And we use this Gartley pattern to enter a short opportunity. And, as I just came back from a workout, pumping some iron in the weight room, I saw that our Gartley pattern was indeed filled. We came up to test previous structure highs. Of course, we had stops above here because we know we're not rookie traders. We're not going to make that mistake of seeing our X leg right here and putting stops a single tick above. We know exactly what's going to happen if we do that. So we got a good safe distance above this. Ended up being about a 10 or 12 pip stop. The market tested that level, wicked up, closed below, and now we're retracing down with the anticipation that if we can work our way across structure, and we actually may have a cipher now, if we can work our way across structure, we're looking for targets down here at a new test of our of the double bottom we're looking for, and a potential stop and reverse to trade this back up. Now, I may end up adjusting some targets on here. Let me just see if we have a cipher pattern completion. And this is the fun of doing this stuff live. As the market ebbs and flows, all types of new stuff is created. 1414. Yeah, we're actually going to have a potential cipher pattern completion. So if traders want to, and I'll get this into the trade floor, if traders want to adjust those targets a little bit, let me just make sure we don't break and close. Yep. If traders want to adjust those targets a little bit to deal with this new pattern, that's certainly an option. Again, we don't necessarily want to fight against a cipher pattern knowing how powerful this is. So cipher pattern completion, potential cipher pattern completion here in gold at 36.47. I'll get this into the trade floor as soon as we're done this video. But let's, the other trade we did was on pound dollar. Same thing. I'll try to run through this quick. Where am I at here? Pound dollar. Let's go to this chart. We had lots of pound news during the London session, so pound's been rallying. And what we noticed on the higher time frame is that we put in a break and close below our previous structure level right here. Again, previous structure lows, the wicks right down here, break and close below, lower low, lower close, tells me trend continuation in that direction. So what do? Well, we go down to our lower time frames. We go down to our 60. And we look for a trend continuation opportunity. Where are we looking for a trend continuation opportunity at? Well, we're looking for a retrace back in the previous structure. I see a wick right here. I see a previous structure low right here if the closes. And you can see price action came right back into that level, and we've refused to close above these candlestick, these lows. And for this one, I actually entered on a range bar chart. You can see right here. Range bars, I haven't been using them as much lately just because the lower time frames have been just, it's just been not much on there. But you can see we got a DSR level right up there. Again, same previous structure lows, looking left, structure leaving clues. We came right back up to this structure shelf right here. Held this level, tried to spike above, closed below it, and I used a higher or a lower low, lower close entry technique. So I entered right about here in anticipation that we're going to come down to this line down here at 70.23, and in bigger anticipation that we're going to come down to that 170 even handle that I talked about in Monday's Syndicate video. I think I also talked about it on TradingView as well when we were looking for another advanced pattern. But that's my higher time frame prediction. So looking in the market and trying to find moves, intraday moves that I can sneak out, what, 10, 20 pips out of? What would this be? A 20 pip move down here, 15 pip move. Trying to sneak out 15, 20 pips on these little intraday moves that work their way and go with, I guess you can say, complement my overall predictions on what I think the market's going to do. So interesting day. We'll see if any of these roll over again. Looks like we may be. All right, so pretty cool stuff. And in that video, you remember me talking about a pair on the euro yen. We ended up taking a small Gartley pattern, I believe it was, on the 15-minute chart in anticipation of that double bottom. Well, lo and behold, guess what happened? That double bottom occurred. Now, the issue was, I didn't get a chance to get involved in it. Why? Well, because our double bottom completed at 3 o'clock in the morning, and I was fast asleep. So unfortunately, I made the right call, made the right prediction, even made the right move on a lower time frame anticipating that call, but didn't get a chance to be involved with it. And this is a perfect example of where having alternate entry techniques come in handy. And something we were watching today in the live room and in the Syndicate was for a potential 26.18 on the euro yen. Now, Jason did a free training video on this months ago, so you can go over to his YouTube page and get the details on how to trade this. But essentially what we're looking for in a 26.18 is the double bottom that we missed. We're looking for a break and close above our structure level here. Then we're looking for a retracement that comes right back into 618 and then the opportunity to buy it up. Now there's a few ways we talked, you see my risk reward out there. There's a few ways you can go about entering this. Aggressive traders, you can enter it right on the 618. More conservative traders, I always recommend going using that if-then thought process. If price action hits the 618, then I go down to a lower time frame and look for my entry reason. And that could be higher high, higher close. It can be a double bottom. It could be a smaller 2618. That's really up to you. The point is, once that 618 and that structure level is hit, that's when that trade should really be on your radar, and you should be going to the next part in your IPDE: identify, predict, decide how you're going to get involved in that trade. So I may have a second chance. I may not. We'll see. Now, before I get into talking about shooting for extended second targets here, I want to just say a big thank you to you guys. I've been using TradingView. I started last week, just posting a chart a day. I usually give Syndicate members, depending on what's on the radar, but a bunch of charts throughout the day. I want to place one a day on TradingView, just to start sharing some ideas. And if you guys know me from the past, I've been really against trading forums. I've had some bad experiences there, and it just usually always ends bad. And so far, again, it's only been a week. So far, this has been different, at least from on my perspective. But I want to start off by saying thank you for you guys that are on TradingView. If I click today, I am the second top author for today. It doesn't mean stuff, but I like to win no matter what I do. So if there's something I could be competitive at, I'm going to go for it. I am the second top author for the week. I may be passing the big dog today if I get 4 extra, whatever these points are. I don't really know how they work, but I'm 4 away. And then I'm right here at the bottom for 1, 2, 3, 4, 5, 6 top author for the month, and only been on for about a week. So I appreciate your support on this. Please continue to do so. I also want to appreciate the type of the character of traders that are following me, and I'll get through this soon. You guys want to see the charts? I'll get to that in a little bit, but I just want to say I appreciate the character of traders that are following me, because so often when we go on these social sites, we get hammered by these trading trolls. And trading trolls are the people that, and you've seen them before, they're people that just roam around trading forums, trading sites, and their only intention is to badmouth and criticize and demean other traders, make other traders feel bad. You know, these are the guys that come on, maybe John posts his first chart. He's been scared for a couple months, but posts his first chart of the first pattern he found. He's happy, he's excited. He's looking forward to hearing positive feedback. And the guy comes in there and says, John, you're an idiot. Why would you trade this? You're all wrong. And then John loses confidence in his trading because of some random person. And I just hate seeing stuff like that, because it's not productive. It doesn't help the educational process. So I want to thank the guys that have been, or traders that have been commenting on my post. It hasn't been negative. There was even a guy yesterday that said, "Hey, Akil, I don't really like this setup. And gave me some reasons. I wouldn't trade it in the past. I've had experiences like this." And basically saying that I wouldn't take this trade, but the way he said it was in a very professional manner. And I've gotten emails in the past that said, Akil, your trading style is all wrong. You shouldn't do it this way. And, it's pointless for you to tell someone that they're trading the wrong way and not lend any advice on how to trade the right way. So it's refreshing to see someone that can disagree with you in a positive way, because real traders out there, we're not worried about how anyone else is trading. We're not going around on Tim West and saying, hey, Tim, you're trading wrong. No. If Tim's a professional trader, guess what? I'm assuming that Tim has a plan. Tim is executing his plan. Tim's plan has shown him historically that he will have positive results. Hats off to Tim. And Tim should recognize the same way. Hey, I don't agree with Akil's trading style, but, that's none of my business. If he's making money, that's all that matters. So again, a long version of saying thank you. Continue to support. If you're looking for me, it's Akil _ Stokes. Now, back to our regularly scheduled program. Originally, I was going to show you this as an example of a trade we can use to identify, where's it at? Get up here. A trade we can use to identify, or we can use to trail targets. Is a potential cipher pattern completion here on euro pound, excuse me. And you can see it's with the overall trend. And this is typically when I look to trail targets, so take extended target twos. If the setup, or if for this case, a pattern is with the overall direction of the trend. Obviously, euro pound has been trending down. I think 100 out of 100 traders can agree on this time frame. We've been in a bearish trend. If you measure the ebbs and flows, new structure lows, outside returns, this cipher pattern is coming right up to a previous level of structure. It's a bearish cipher in a bearish market. This would be an opportunity where I say, hey, you can, if you want to trail target twos, you trail and you shoot for an extension, looking for a new structure low to be created. So that's an example right there. Another example is we actually found here in the live room today, and I'm long this pair about break even. But if we go to Euro Aussie, let's just go to the 240 first. And I hope this video doesn't end up being too long. But here's what I'm looking at, pound Euro Aussie on the 240. Now, you guys have been following me for a while. You know that I've been short, not short, but I've been getting short over and over again, looking for extended profits on this pair. I just haven't been able to hit it. But it's pretty obvious that we are in a bearish rotation here. Just our recent price action, swing low, outside return, new structure low, outside return, new structure low. What should we expect? Yep, outside return. And earlier in the week for the syndicate, I broke down a few levels that I'd be looking for. The first level would be a minor level right here, looking to kind of probe the market and see if we can get a really low risk chance at getting short at a really shallow retracement coming up to here. The second level I had was right in this area where we have this, our structure zone of our previous lows. And you can see, again, our previous new structure low was right here. Looking for the market to really come up and retest those levels. I'm not sure what I just did, but anyway. So what we identified today on the lower time frame, as we went down to our 60-minute chart, was a potential butterfly pattern. And this was a perfect example because we had a a long conversation earlier in the day about butterfly patterns and how I'm not a real fan of them because of how they complete. We talked about the psychology behind them, but also when they could be used. And this is a perfect example of when I would use a butterfly. If I look at my my most recent impulse leg right here, my X leg. There we go. X, there we go. Man. If we look at this move right here, what do I have? I have an X to A. I've got an A to B that's going to come up into a 786 Fibonacci retracement. 786 means what? Gartley pattern is invalid. It means look for a potential butterfly pattern. Again, I trade my butterfly patterns. I look for a Fibonacci extension from A to B and back down. I look for that 1618 Fibonacci extension. Let's go ahead and just isolate that a little bit. I look for that to line up with a 127 Fibonacci inversion taken from my A leg back to my X leg. And again, let's isolate that a little bit as well. Computer gets so slow when I got 1,000,001 things running. And you can see we got perfect Fibonacci confluence between that. So I'm expecting, again, if-then thought process. If the market goes up, then we're going to have a butterfly pattern completion right up here. 127 Fibonacci inversion, 1618 Fibonacci extension. We've got a 44 even handle as well. We know that's a high psychological number. If I bring my red line up there, what do I have? Look at that. Retest the structure. We're a little bit above these structure lows, but we're banging right into 1, 2, 3 structure level right there. So if you're a trend continuation trader, you can either do this. You can either use this as your entry technique to hop into the trend continuation trade. And again, if you're a true trend continuation trader, you're looking for an extension down past our previous structure lows. But going on the subject of the question I got, if you're a butterfly pattern trader, you're measuring out your targets. You're looking for target 1 at what? The 382. Instead of taking your target 2 at the 618, because we're in the same direction as the overall trend, the underlying trend, this would be an example of when you may want to trail target 2s and see if price action can get all the way down here to retest these lows, 42 flats, or if we can even extend beyond previous structure lows. And you can draw on a 127 inversion if you want to get a target profit after that, 141.40s, or just trail that structure and see where the market takes you. But the point is, again, when we get these patterns, when we get these setups that are with the underlying trend, you can say the higher time frame trend, whatever your higher time frame is, that's when I would look to trail target 2s and see if you can get a little bit more out of the market. I actually took a long opportunity on this in the live room today because of this. We looked at this on the 60. We actually saw some hidden divergence here. And we talk about RSI divergence a lot. Usually we talk about regular divergence. But if you take a look at this, the market's putting up what? Higher lows right here. What is the RSI doing? Boom. Lower lows right there. That's called hidden divergence. And that's supposed to signify that we may have a trend continuation move coming. So we went down to the lower time frames in the live room, went down to the 5-minute chart, I believe it was. And we did what we usually do. We identified some structure right at this level. Bang, I think we had a few Fibonacci's in there too. Long story short, we got long, and I'm looking to ride this market up. Not all the way to the butterfly pattern completion because it's Friday. I don't plan on, I don't think we're going to get that high on Friday just because of the average, what the ATR has been. And I'm not holding my day trades over the weekend. No way. So I have my initial target set for 43 flat, seeing if we can get up there. Up about 8 pips right now. But I'll close this out before I shut down shop for today. So that's it. This is another long video. Phone is going crazy, which means that's a sign it's time for me to go. But thank you for joining me. Thank you for spending some time with me this week. If you're new, again, hey, if you like it, shoot me a comment. Say, hey, Keel, first time viewing, thought it was good. Hit that like button, hit the share button. And if you want to be updated on this every week, subscribe. That makes it very easy. So you know exactly when the video comes out. So thank you guys. you guys have a great weekend. And as always, plan your trade. Messing up. Blooper reel. There we go. As always, plan your trade. Trade your plan. It's Friday. My brain is shot. I will see you guys next week.